All right, so this is a 13-week rolling cash flow forecast that we've put together. The file will be available. There's a link down below if you haven't already gotten a hold of it. But this will talk you through how it works. So this is the actual forecast, but we need to talk about what makes it work. The payroll tab is pretty straightforward. By week, we're going to list out the amount of dollars that are going to be pulled from your bank account for payroll. So this is payroll and payroll taxes. So if you have a provider that pulls two transactions for payroll and payroll taxes, we want the total of that and the week that it's happening or the date that it's going to happen. This will calculate the week number. This is how we tie it back to the cash flow forecast. So this is pretty straightforward. You should have a payroll schedule from your payroll provider and then an estimate of how much you've been spending on payroll based on the prior periods. These next three are all going to be reports that are generated from QuickBooks. So the AP aging detail report is basically the detail of all the invoices you owe to your vendors, and it's going to tell us when they're due. We're going to use that date to calculate what week number they're due in. And this report, you can export in Excel format and then paste the data into the columns here in the gray area. The AR aging report is very similar. The only difference is this is money that your customers owe you. So if you have this report pasted in here, we will look at the due date based on and tie that to a week number and use the open balance dollars to calculate how much you should be receiving, assuming they pay on time. The trial balance is a report that will show you the balance of all the accounts in your system. The ones we care about in this instance are the bank accounts. So in this instance, we have checking and savings. You may have more depending on what your structure is, but you'll need this total to populate the trial or the forecast. So that amount is going to go here. We're going to add the total of the bank accounts and put it here in this blue box. This formula is basically going to tell us to give us the Monday of the week that we're in. So I am doing this on the 11th of November. That means it's going to give us the Monday date, which is 11/10. And that's how we get the week number for this forecast. So we get the bank total from the trial balance. The customer payments comes in from the AR aging detail report. And then the payables comes in from the AP aging. So if all this happens, we would wind up with $1,500 in the bank account, which becomes our new balance for the upcoming week. And you can see in the upcoming week, we have some payments coming in from customers, but then we also have payroll going out, so it's going to drop our balance. And this keeps repeating for the 13 weeks. What we're looking for is these moments here where the cash balance drops to a negative position, which obviously isn't ideal, but will allow us to figure out, well, why is that happening? And what do we need to do in the weeks leading up to it or in that particular week? Maybe we just can't pay that bill for $1,500 that week and we need to push it off until we get more money in. That could be a decision that we get to make. But over time, what we see is the cash balance goes up and down based on the activity of the company. And then again, we can see over here, there's another time where it dips down. So 13 weeks is long enough to see the pitfalls that are coming, but not so far out that it's irrelevant. So if this is something you'd like to have on our ongoing basis, if you'd like more detail, or if you'd like this to just show up in your inbox, let's have a conversation. Obviously, you're free to use the file. We're happy to get it to you. But if this is a thing you'd like to have just running automatically in your business, let's have a conversation and get that set up for you.